So there are two rules, okay, which we surround these IB and IS signals with. And the first rule is the high of the IS bar and the low of the IB bar become immediate stop losses with a small filter. The second rule is all these signals are valid, okay, for 10 bars. So if they came in about 30 minutes, they are valid, okay, for the next 300 minutes. So we always define our signaling in terms of time. One signal, okay, which is come in on a 30-minute time frame or even on a 5-minute time frame is not valid forever, right? So a lot of traders, okay, what they do is once okay, they get a signal on whichever chart, on whichever indicator, okay, they are looking at, they expect, okay, that signal, okay, to last them for a lifetime. That's not how the derivative market works. The derivative market is very, very time defined. Time is a very, very critical element of the way we work in our markets. So every single signal, every single message, okay, which comes to you has a defined time to it, an expiry date. And for us, that expiry date is 10 bars. So after that expiry date, that signal is no longer valid. But if you change the input, if you change a little bit of what you are inputting into your trading lives, in terms of your knowledge, in terms of your experience, in terms of, okay, what you are doing as a trader, the output can change, right? If you're expecting change, if you're expecting, okay, something different, okay, to happen for you in 2025, you will have to take that decision and you will have to make that change by yourself, right? So take that decision. It's your call. It's your trading account. I just wish you the best about in the way, okay, you're going to be moving this forward. Whichever way, okay, you move it, I want to give you the very best. And I'll end off with wishing you a happy and a prosperous, okay, new year 2025. Make the most out of this year. We are super excited about what lies ahead in 2025. We are definitely looking forward to a lot more stronger signals. And the market has become clearer. So foundation wise, okay, we are okay on the right foot, and we are super excited about what happens in 2025. So thank you all, okay, for joining up and for listening. So as we go into this new calendar year 2025, I just want to talk to you, okay, about adopting a right process, about, okay, working, okay, with what you are comfortable with what you should be at. I've just walked you, okay, through a small element, okay, about what the order flow trading is all about, and I've used, okay, exactly, okay, what I've spoken to you about. These are the signals, okay, which we do every single day in our VMR room also. But my journey has been, okay, through a process of learning, and with that learning, okay, I've been basically fortunate enough to get some good experience, okay, knowing, okay, various conditions which have given my setups, and that's come through a lot of observation also. I invite you, okay, also on this journey. You'll have to, okay, get familiar, okay, with your tools. I've given every single thing, okay, to order flow, and we have got excellent market profile and order flow charts, okay, with us, which help us in our decision making. It's all about those decisions, getting the demand and the supply side of the market right, knowing, okay, when the buyer is stronger, knowing when the seller is stronger, and going to work with that.
Good evening, guys. Good evening, everyone. A quick sound check. I hope I'm coming across. So welcome to this Monday 5 p.m. session. So we had a chart update last week, so we were not able to do the Thursday session. But anyways, we are back today, and let's start with the review of what happened last week in spot, and then we'll move on to the futures chart along with the order flow. Plus, we have two new features which have been added into the charts, which are extremely useful, and they can help you as a trader in many ways. I'll come to that bit when we go on to the order flow charts. To start with, the weekly report is up. This was published on Saturday. And what we did last week was a narrow range weekly profile in Nifty. So you can see how the week played out. We had more of neutral days. So when we have neutral days, it means that there are two parties which are present on the day. So when you have a week full of neutral days, you know the entire week is uh, full of dual activity and the market is deciding between the buyer and the seller. So it is kind of a matching bout going on to judge who the winner would be. So you can see how we started the week with a lower open. We formed this neutral extreme to the downside, and this weekly VPOC, which we had been discussing in our sessions, 233 23339, which was held in this week of 6th to 10th January, was broken with a gap down, and that showed us change of polarity. We made a seaside extension there, and that kind of held, and we remained below that for most of the week. So we formed a balance after this neutral extreme profile. This neutral extreme profile did not give us any follow up to the downside, and then we formed this 2-day balance. In this, we left a failed auction at 23134 last Tuesday on 14th of January, and then we went on to tag the 180R, almost tag the 180R, which was a 23396 with this higher open on 16th. But this was more a swipe because it hardly stayed at that level. And what we found we got on Thursday was a initiative selling tail. So that was telling us that the probe above this weekly VPOC is not got any demand. So even though this is a spot chart, we don't have volumes. The AP rate selling tail was very clearly telling us that the spot is not able to stay above this previously uh, support zone of 23339, and that is showing us change of polarity. So after this long liquidation profile of Thursday, we continued the downside with another AP rate selling tail and a probe swiping below these two value area zones of Tuesday and Wednesday. But what we did here was we took support right at this 23,100 and we left a responsive buying tail. So you can see how on Friday we have formed an ideal 313 profile. It's a Gaussian curve with similar tails on both sides. Both the tails have got similar number of TPOs. So this was what we did on daily. If we take the weekly chart, you don't get to see a better Gaussian curve than this what you are seeing on screen. The weekly profile was also a ideal Gaussian curve with a close right at the mid, which is the prominent POC of 23,221. So we had mentioned this. In fact, we had put it on X also that the weekly profile is a neutral center one in a very narrow range of just 344 points with completely lower value. So the week prior to that, we had profile which to the downside. So that imbalance kind of made way for a balance to be formed. So the value was completely lower. So we have a very good chance that this balance could again lead to an imbalance. That is what we look at in market profile and accordingly trade that imbalance. So what we needed was either we get initiative sellers below 23,100 for a probe lower towards this weekly VPOC of 22745 and May's monthly POC of 22481. These are the probable targets on the weekly time frame on the downside. Whereas on the upside, we need buyers stepping in above the daily singles. As we mentioned, we spoke about two AP rate selling tails. The first one was at 23269 and the second one is at 23353. So these two will have to be negated and we will need to see some buy side activity for a probe towards this weekly VPOC of 23538 and then this supply zone of 23,800 to 23,911. So this is how we were placed today, and these were the hypos for today. So another important thing to mention here, in the hypos you can see how we have this weekly value area high as one of the important hypos. So if we are moving away to an imbalance, what would we do? We would leave signs or extension handles at the weekly value area levels. The first would be the POC, which was 23221. Then we would need to get above this value area high if we are biased to the upside, and then we will need to take off this swing high of 23391. So these were our hypos on the upside. You can see, and 23341 being last week's IBH is one important reference because we tried to extend in both directions the previous week range, and we could not sustain, and we closed right in the middle. So if we succeed in any of the direction, if we sustain about this 23341, we have a case of probing higher. And if we sustain below this 23100, we have a case of the seller doing the unfinished business which it attempted last week. So these two would be important references. So we let us just see what we have done today, and I'll just open up today's chart and compare it with the weekly chart and also the hypos. So you can see how the open was higher, but we got rejected at the VPOC of Friday. 23,300 was a VPOC which we had mentioned in our hypos also. This was the high we made at open, and we got rejected. Got back into this weekly value because this is a nice balance. What it triggers is the 80% rule. So we are aware, we have been discussing about this 80% rule, and the 80% rule got triggered, and the first target of the 80% rule would be the midpoint of that profile, which is 23221, which we hit, and we made a low of 23170 on the downside. Last week we had a VPOC at 23168. The 2-day balance which we saw, the POC was at 23168. This was a very prominent HVN, and when we broke that on Friday, we got support, we got demand. So again today we saw that 23168 being defended because the low we made was right there. So after this, what we did, we made a consolidation in B. The B period was completely inside, and because we had left an A period selling tail outside of previous value, we were looking for a range extension lower, which we broke below this A lows, and then take off this value area low of last week. But that did not happen. Instead, what we did, we again probed higher in the C period to the value area high, and then you can see how we left an extension handle. So we have left an extension handle at the previous week's value and then at today's IBH. So here we are getting example of the buyer stepping in, but the buyer was not able to do a good job because I'll just increase the TPO size so that we can have a look at what the daily chart is like. Because for the buyer to continue doing a good job, he will have to form a trend day, and for a trend day he will have to make multiple range extensions higher with an elongated profile. But what happened in Nifty spot, we did leave this big e period extension handle, and we held above this 232 the halfback of E. But on the upside, we were not able to take off this swing high. The previous week high was not taken out. We made a high right at the 23391, which was our hypo on the upside. So what we have done today is we have stalled here. So Nifty, even though we have made a double distribution trend day up, we have formed a very unusual kind of a balance at the top, and this will need some breakout. So we will need some buying to come in above the swing high to confirm that the Nifty is starting a fresh imbalance towards this weekly VPOC of 23538. So however, today this extension handle will be our reference, and we will have this weekly value area as our lower support. Because we are above this weekly value, we will be bullish for more upside. But yes, we have hit the first hurdle of the swing high, and we will need to take this off and continue higher in the day to come. So that is as far as the spot is concerned. Let's now have a look at the futures chart. Before that, I'll just want to show the Nifty spot daily chart, and you can see how on overall you can see how from last Monday to this Monday we have formed a balance. We are still in a balance. The balance is taken support at this 23100 level, and on the upside we will have to take this 23391 swing high out. So if we can in fact even merge these 1 2 3 4 5 6 days and make a composite which will be our reference for the days going forward. So as long as we are above this 23296, we can expect this move to probe higher. So this will be our upside objective. So Nifty still not clearly given us a breakout which we were expecting, because last week was a balance. We are still in previous week's range. We have not been able to, although we have made value higher than previous week's value, we have not been able to take off the previous week high, which is also an important part. So I'll just redo this merge. I'll just unmerge this again. So in market profile, we trade value. We do not trade price. So what we do is we watch how value is being formed over a period of time. On the daily charts, if we are forming higher value, we know it is trending up. The market is trending up. So from last week, you can see we already have a 2-day composite here, the 14th and 15th, because I showed you in that weekly report how we had formed a balance over the 2 days. So we were completely inside this neutral extreme profile. The value is inside this, but we had some references in this neutral extreme profile which had to be marked out, which is why we did not merge. And what we did on 16th is an attempt to move away from this value, but we got rejected back here. So even today we made an attempt to move away from this value, but we have stalled here. So that is why this last 6 days overall has been a bigger time frame balance. So that is why we select these profiles, and when you select them, they give you the shaded field, and you have the option of merging them, and you can only merge adjacent profiles. So you can merge only adjacent profiles. So all these adjacent profiles forming overlapping value, we do a merge so that we get a place. So this you can see how this composite value area is been got, and now this we can take it as our longer time frame reference on the downside. So if we get back above this, we can look for the 80% rule to play out in this composite. So as long as we don't get back into this 23296 level, we can look for a move away from this value, provided we take off this 23391. So this is as far as the spot is concerned. Let's have a quick look at the futures chart along with the order flow of Nifty futures. So this is how we closed on Friday. We can see how it's a nice, well balanced profile, and it's a neutral center. In fact, it was a record in Nifty futures in the history of when I have been following, almost from I think 2016. I've never seen 4 consecutive neutral center days in Nifty futures. So last week started with a neutral extreme, and then next 4 days were all neutral center profiles. So what we did was, again, you can see how the first 3 days we have formed a nice balance. So we formed a composite. We made an attempt to move away on Friday, but we failed. We got this small JTP outside the IBH, and then we closed right in the middle. So sorry, this was on Thursday. So after this, we probed lower. We made the 80% rule in this value area, and on the downside, we, as we saw in spot, we left a responsive buying tail. So we were seeing some demand coming in this 23,150 zone. So for today's reference, we had a failed auction at the top, which was matching with that spot VPOC of 23341, and we needed to stay above this POC. We had a very prominent POC of 23265. So what we did today, if you see the order flow, we made a higher open. We opened around the IBH, but we saw sellers. We saw some big selling. We have this 2500 contract right at open. So what we made a probe lower, and you can see in this profile chart, we have this HVN marked. This HVN is nothing but high volumes which were transacted. So that was an important reference, and that would be our kind of a support below this value. So even though we did the 80% rule, we got selling in the higher open, and we made this probe lower. I'm sorry, I'll just shift on to today's chart. This is 17th. So this is today's order flow, the first 15 minutes. You can see how we the higher open did not get any demand. You have zeros on the buy side, and we made a probe immediately back into previous value. So if I so this higher open did not get any demand, and we got back into this value, triggering the 80% rule, which we completed. And on the downside, we took support right at this HVN. So in order flow, you can see how here we did not see demand. So this probe was lower was done, and we also got into put long trades in the VMR. But after this probe lower, what we saw in the next 15-minute bar was an RB. And this RB came at one important reference of this 23222. In fact, we have a daily market analysis report for futures also. And in that, we had this marked as our business area. So when you're getting an RB bar, and you got two rows of greens here with this RB signal, it is telling you if you are short, you need to come out and wait for a fresh sell side signal. So rightly so, what we did was we got back above VWAP, and once we got back above VWAP, we remained above VWAP. So whatever selling we had seen at the open was not able to keep it below this HVN. And because we are trading in a nice balance, the 80% rule to the downside, and then the rejection we left at the lows triggered the 80% rule higher. So we went back, although the value area of Friday was a very small zone, but the setup was still valid. And for a move away, we needed to stay above this value area high. And we also had our anchored VWAP marked at that level, 23313. This is our anchored VWAP from the swing high of 16th. Because 16th Thursday, we left a new swing high. That was our reference. So that anchored VWAP had to show us some buy side references. Even though till 10:45 you can see there was more supply coming in, even the cot was mainly red because the sellers were trying to hold on to this level. But once they were able to take the reference was broken, you can see how the volumes expanded. And you see that in the order flow how the volumes was below average in the morning, and it continued to come down. Once we got back above VWAP, again we saw some volumes to get stabilized, and once we got that breakout, the range extension with zeros right in the middle, which becomes our support, and that came at the important reference of this 23340. So that became our reference. Even though the cart was red, it is very clear in the market profile chart as well as the order flow chart that the sellers are not able to do a good job. So with this as our reference, this green bar was telling us that we are looking for a probe higher to this VPOC of 23371, and then this higher swing high of 23424. So that is what happened. What we did was we immediately tagged that VPOC and then went on to kiss that swing high. But again, here you see we are not getting much auction to sustain above that level. So here we saw some stuck shots pulling out because you can see the cot turning green. So these are very good scenarios where order flow is telling you, even though you're getting this green LLT here, the order flow signal is an RS. So this is more of shots who are trying to come in earlier, who are forced out. And that is the reason what we did, because this rise was not on a healthy green cot, we were expecting it to stall or come back and test VWAP at least. So what it did was it stalled between this 23424 and this 23380. So it remained between this narrow range for the rest of the day, except for one I period move where it made an attempt to extend, but immediately it showed us no demand at the new highs. So here what it did, it almost completed our 2IB mark, which was a 23460, 23456. So we made a high of 23449, but again the order flow signal here is a RS. So here again, even though we have got a 1505 green, LLT green, but the order flow is not supporting our long side bias. So that is the reason uh, we had to again relook at the longs or book out of any longs we were holding. So what, because we were staying in this narrow range for the rest of the day, what we did was we formed the POC also shifted higher to this 23410, and into the close we just consolidated and coiled. So what we have done on the daily is form a double distribution trend up profile, although it is not an ideal double distribution profile, because in an ideal double distribution profile the range extension happens in the F or the G period, but today it happened in the E, after which we did not get any follow through. So this POC, this prominent POC would be a reference for tomorrow at the open. We will need to stay above this POC for more upside, and this VWAP would be our support. VWAP and the extension handle of 23340 would be the support for the rest of the week. So as we saw in spot, the Nifty futures also remains in a balance. It is still not given us a confirmation about a imbalance charting. Why? Because we have left a responsive selling tail at the top, and we have stalled right at this swing high. Although we have formed higher value than previous session, overall if you see from last Monday we are in a balance. So again we will have to look out to take for this responsive selling tail to be taken out, for us to probe higher towards this weekly this daily VPOC of 23512, and this VWAP would be an important reference of 23554. And then we have this anchored VWAP coming right from 2nd of January, where we made the swing high from where we started trending lower. We had formed a trend day up on 2nd Jan, where the POC shifted to the top, and even the cot was showing us big reds. So nothing of that kind of has happened today, because the cot is marginally green, I think. But nonetheless, we will have to get some good buy side volumes in the morning tomorrow for us to probe higher to these references: 23512, 23554, and then this anchored VWAP of 23644 would be the important references on the upside for this week's Nifty future settlement. So let's see how this goes, and let's have a look at couple of order flow charts of today's options. So the interesting new feature which we have in options in the charts, the first feature is from any chart, and you have this option of going back into any day. So you have date and time, a quick navigation of going back to any date and time you want. So you can instantly explore any historical data of futures, options, order flow, market profile, and you can gain the comparative insights. So it is a very useful feature, and it is very simple to do. For example, in Bank Nifty, we had made the swing high on 9th. So immediately when you're looking at the order flow of Bank Nifty and you're seeing a trend move up, you can go back to the order flow chart of 30 minutes and see what the reference on 9th of January was. So the reason we are watching this order flow chart of options is to gain insights about how the option order flow was showing us a move which was coming, and which was opposite of what happened at the open in Nifty futures, because Nifty futures opened as if it would swipe through lower, because it got rejected at an important reference on the upside, and then we got that move back above VWAP. So all every time the order flow will not show you IBs and IS, but the order flow will definitely give you good enough cues for you to know what is happening and make sense of the direction of the market and look to trade that direction. So when you get an IB and an IS, it is a very simple trade. You keep the IB low, you wait for the IB high to break, and you keep the IB low as your stop loss and look to trade in that direction. Same with IS. But when you don't have IBs and IS, and you know the market is giving you a move, then how do you make sense of order flow? The best signals, the best trades happen when both the futures and the options are supporting and are in sync with each other. So when you're getting an IB in futures, a similar move in option, in the call option, will give you that double confirmation. But many times it is not in sync. So sometimes the market moves only because of some imbalance in the option inventory. So there is no signal in the futures, but the options will give you a move. So that is how it is plays. And order flow is a very clear tool to identify how the supply and demand is matching. So whenever there is a mismatch, you will get a move. That is what we want to identify and make use of. That is why we have all these initiative signals, and that is the reason we are following order flow. So because it is very clearly and transparently showing us how the supply and demand of that particular instrument is shaping up. So when you are looking at options, you will see a lot of writing which comes in. Because today's open was not a bullish one, there was good writing which was coming in the call side also. So that is what I am trying to show in this order flow chart. So how at the open you can see this was a swipe lower, and what we did, we broke below previous day's VWAP, which is this 317 level, and when we went on to make a low in the 939 bar, this is the same time where we hit that HVN of 23222 in the futures. So here in this bar, the 939 bar, we can very clearly see zeros on the sell side, and you've got an RB bar. So what we analyzed in the Nifty futures order flow chart, this option is giving you a very clear sign that you're not getting any supply in this zone. So this 294 becomes your reference, and you are looking for an IB signal, and more so above VWAP, because once the option is above VWAP, it can move higher. Below VWAP, an option is always attracted to the sellers. The sellers will want to enter that option and keep driving it lower. So this 939 bar was a very clear signal. You have 4 rows of zeros and you have an RB bar, and immediately after that we have got back above VWAP. Yes, we have got rejected at this VWAP. We have got an IS bar, and that IS bar gives you a new low, but this new low is defended right at this RB level. So what you're looking at here on the order flow, even though you have not got a clean initiative buying signal, what you're seeing is the auction is first showing you RBs at the lows, that is being matched with the reference we had in Nifty futures, and then an IS bar in this C call is getting negated. We have got about this IS bar. So it is just telling you that you need to just wait and look for some opportunity in this. So what we see here, we are not getting a clean IB signal, but we have got multiple RS bars around this 330 mark. So this 330 was our reference, and we are looking for a break above 330. And as we always maintain, once you're looking on the upside on any day, the VWAP of that day becomes your reference for holding that upside. So when you're looking at a range extension trade above the initial balance high, you will have VWAP as your reference. So similarly, even before the action unfolded in this call, if we would have got about this 330 level, this VWAP would have been our reference on the downside. It would have to hold VWAP for us to expect more upside. So you can see how we made touch that 330, but again we have left an RS, and then we slowly got above that. And here, once we sustained above this 330 level, it was a case of being more alert, or in fact, if you're an aggressive trader, you can go long in this call with a stop loss below this VWAP reference of 313. So what we did, we went on to make a high of 345. We made a dip, and this dip in the 1048 period, this is the seaside, just after the seaside closed, you can see how we have dipped at the VWAP, and you have got again zeros on the sell side. The POC, this is the white bold line, which is the POC of this option. The POC and the VWAP both are being defended, which is showing no sell side numbers. So this was reconfirming what we were following here. So this is just an analysis of what the order flow was showing you. And if you just want to go by the signal and you want an IB above VWAP to go long, you get that in this 1115 bar. You see how what we were watching and observing has given this IB bar. So this IB is very easy to trade. What you need to do, you need to go high above this 384 with the stop loss of 340. So that will be your reference. Plus what we can fine tune in this order flow is you have zeros in the middle of the bar, and this dotted line is the IBH. So when you're looking for a range extension trade, your IBH becomes your reference. And here order flow is very clearly telling you that this IBH has been broken with zeros. Initiative activity has been taken place here. So you can have this IBH as your stop loss instead of this 340 level. So this is the beauty of order flow. In one bar, it has given you multiple support levels. This POC is your first support. This zeros is your second, and definitely the low of the bar would be your third support. So depending on what your time frame is, what your lot size is, you can go long above this 385 and accordingly book profits. You can see at no point of time even this IB POC was tagged, and your entry point of 384, once you hit the first target, also held for the rest of the day. You can see how very cleanly this 1127 bar has made a low of 385, and then we move on to make higher highs. In spite of all the consolidation which happened in Nifty futures, this call did not break the 384 level. It held the 384 level all through. It made this low of 388, and you have got only IB bars. But yes, we were not able to uh, get going too much higher, because you can see once we made that range extension in the high this call made was 449, but immediately it retraced it. It was not able to sustain. You got zeros on the buy side. So this order flow is telling you, if you are long this kind of a signal, you need to use to book out and trail your stop losses. So even into the close, this chart, this option again made a pullback to 388, got back again higher to 428, remained in this narrow range. 394 is the dip, and into the close, it made a low of 392. So this is what the call order flow showed us. And you can see, although the IB signal was only one, you had one trade which you could have taken using the initiative buying signal. And the trade also was a success. In fact, the entry point of that trade has still not been tagged. Plus, even before that signal came, we had some references and some cues in order flow which was showing us that we could have gone long even before the IB signal came in, because the auction took support, showed us RB, got back above VWAP, which was coinciding with previous day's VWAP. So this is how you need to make use of the options order flow. Sometimes the futures and options will give you similar signals. That will be the best trade, and that will give you the easiest moves. But sometimes the trade comes only via futures or only via options. So accordingly, you will have to adjust and trade those kind of setups. So we had a look at uh, the 23,000 call. Now let's have a look at the put, one of the put. And for this put, I would want to take you back to what happened on Friday, and we'll use this replay feature which we have. So we not only can go back into time, we can also play the order flow chart of any period of any time you want. So this is a very useful feature for a trader to review his trades and rerun the market scenario live, kind of a live basis, so that he can see what was wrong or what was right in the trade he had taken, and how he can be ready next time that setup plays out. So I'm going back to 17th of Jan, 9:15 a.m. and this is the 23,500 put. And what you need to do, you have this option of what speed you want to play the replay, and you also have this replay speed here on the top, plus the speed at the bottom also. So I'll have this fast load frequency, and I'll make it as a 5x1, and I'll push up replay. So this will take me to the 17th of January's opening order flow, and it'll replay the entire order flow of that particular session, what I have marked. So it helps you to very easily go through this. You can adjust the speed as per your uh, need, and look to replay all your setups and see what has been taking place. So in fact, you can do this even for today's order flow. I just went through the order flow of the 23,000 call. You can even do a replay and see what I had explained, how it is setting up. So here we have got an IS here. So this 360 becomes a reference for this put in the morning or uh, Friday. And then we keep watching this. What I want to show you in this option is that we probe lower, we got that IS. It was again followed by another IS, and we made a attempted range extension to the downside. So that gave us new lows, but what it did was it also confirmed a failed auction. So it is very important for us to do our homework and become prepared in this market, especially the kind of markets we had last week where we were moving in both ways on all days. We need to be at our best. So we need to make best use of the tools which we have. So whatever information we had from Friday, we had to make use of it. We needed to know where the supports for the put was, where the supports for the call was, and in reference to what was happening at open there, we needed to take those trades. So this is how we can play out. You can see how this 286 was below the IBH, and then how we got back above VWAP. We went on to break the IB hedge. So this was a failed auction. I'll stop this here so that we can continue with our presentation. This is the feature which you can use, the replay feature. You can adjust the time, the mode, and you can also mark out which time frame you want to trade. Quickly going back to that day's order flow chart, what we saw that day was a failed auction at 286. So the 286 was our reference in this. You can see this yellow dotted line was the IBL. We broke below the IBL, got rejected. We got back into initial balance and we broke below this initial balance high. So this was a failed auction. This 286 was a failed auction. And if I go to today's morning order flow chart of the same put, and let's have a replay of that and see how it played out. I'll have the normal speed. So you can see how at the open we broke below the 286, but at no point of time you can see that we were below the 286. In fact, we have got zeros there, and it was very clearly telling us that FA is being defended in this put. So what it was telling us, once we got back above VWAP, this was a very safe trade you could have taken. And in fact, we took the 23,400 put trade in the room, but this 23,500 put based on the FA of 286 being defended, being shown zeros, was a good trade above this first 3-minute bar. And we went on to make a high of 360, which was the upper reference. You have these NPOCs line which serve as probable objectives. So this is how you need to make use of this order flow. You can make use of the replay feature, see what are the important reference of previous session, and then accordingly look to take trades in that. So this put not gave that first objective, but once not only gave the objective on the upside where it was a long option trade, it also gave you good opportunity on the downside of the same reference. When you saw the 286 being broken and you saw IS coming in this put, it was very clear that the option writers are now selling this option. And if you are an option seller, that kind of a signal is the best you can have for going into the short side. So I'm just replaying this to just show how it changed. The first thing, it breaks VWAP. It is no longer long biased. And then we have the morning reference 286 is where the FA was. You have an NPOC of 291. So you just wait for an IS to come there, because after the initial break move to that 360 objective, we have not seen much demand. We have formed this RS bar and we have come back to VWAP. We are breaking the VWAP in this put. So whenever you are looking for a trending move, the both the call and the put will give you opposite moves. It will not be keeping uh, aligning to VWAP as it was doing last week when we are getting neutral days. So here we went above VWAP, hit one objective. Now once we are below VWAP, it will keep going further down. It will keep giving you lower references. So you can see how we are approaching that FA point of 286, and we'll need to see what the order flow shows us when we come there. So that will be our cue of knowing what is happening in this option. So here here it is getting rejected continuously at VWAP. It is not able to sustain above VWAP. So we are still waiting for the 286 level. If we break the 286, this 333 reference would be a good stop loss to hold a short in this put. So because that's an important support, you can see that has not been that is being held. This is where the initial balance has got over. We are in a C side. C side is something which we will be very cautious. So the C side hitting the 286, we will still wait for the D to continue lower. We have broken that failed auction. We have not got an IS, but yes, after multiple rejection at the VWAP, we are looking for a range extension lower in this. So we'll wait for the D to confirm, and then we can look to go short in this put with the stop loss above VWAP. So this is how you look at the order flow and look to trade it. Let's see once we start B if it is able to give us new lows. So this is the last bar of the C, and immediately after this we get the D. So whenever you're taking a position, you can see how initially once the D started, in fact, it was looking like it is going to give a pullback, but it left a 297 and it pro back lower. It is not even going near the VWAP now. And this is where the POC is also shifting lower. So it is telling you that the base may be shifting. Unless you get an IB at this POC and then a move back above VWAP, this put is being written. So once we get this lower low in the D, it is confirmed. So with this VWAP, the 333, which was our reference, can now be trailed down to this POC, shift of POC. We have spoken in our other sessions on options how the POC and the VWAP of options are very important references, which we keep checking, we keep marking out. So here you see this 286 is now showing us change of polarity. What was the support is showing us an RS. So now it is very clear that this is definitely on for more sell side. And you can see how we now break this. This is the E period which is starting and we make lower lows. So it is telling you that this option can be written. Now you can trail your stop loss to this 286, which is your cost. And if I'll close this and I will just see what happened to this option. I'll just quickly move on to the 30-minute order flow and do a quick review of how this shaped up. So you can see how once we broke below the 286 in the E period, we made the range extension. We remained below VWAP all day and we made a low of 189. So this is how you make use of this order flow nuances. With this added feature, you can go back to any time, any day and watch any of the order flow chart again and mark out important references and make use of them for the next session of trading. So this is this was about the option charts and a quick review of the Bank Nifty before we wind up for today. Bank Nifty spot actually was bullish even last week because what we did on Monday, we formed this neutral extreme. After forming this neutral extreme, we got an initiative buying tail and we formed overlapping to higher value. So Bank Nifty was telling us that it has got some demand and this A period was holding. We formed higher value the next session. So the buyers were telling they are in control. And what we did on Thursday, we continued to probe higher. We left this A period tail, but the entry into this weekly value was not accepted. we formed this similar highs, it was showing us exhaustion. So it was kind of showing that some weak hands are in, and what we call it, that the bus is overloaded. When we are in the VMR, whenever we feel that the move is uh, slow, we feel there need to be some unloading which has to be done. The inventory is gone too long or too short. So that is what kind of happened in Bank Nifty, which resulted in this narrow range Gaussian curve on Thursday. So once we opened lower, we saw this big A period selling tail. This was more because of the stuck longs being forced out rather than initiative selling. Because if this was initiative selling, we would have got a big, good range extension setup lower, which did not happen. We held this A period buying tail. That means the initiative buyer who had come here was still defending this zone, but it was the laggard buyers who had come in later who were forced to come out. So what Bank Nifty spot did on the weekly time frame, what it was looking to do was a neutral extreme, but because of that uh, Gaussian curve on Thursday and a move back on the B-shaped profile on Friday, the Bank Nifty also gave us a neutral center profile, and the neutral center closed right at the prominent POC of 48564. So today in the hypos of Bank Nifty, we had that as our first reference on the upside. So on the weekly spot chart, we have always maintained when we do these sessions that above a weekly POC, we would be bullish. Below that, we would be bearish. So Bank Nifty start today was extremely bullish, because if I open up the Bank Nifty weekly chart, you can see how not only we opened above the VPOC, we have left an A period buying tail. And we went on to probe above this value, the neutral center weekly value, and then we have left an extension handle. So Bank Nifty was very bullish right from the open. In fact, Nifty had to consolidate, do that multiple 80% rule, and then move higher. And then the upside also was not that great because it stalled at that swing high. But in Bank Nifty, it was a clear case of a trend day setup, because it it ticked all the boxes. It opened above the weekly POC, left an A period buying tail, extended the range extension, left an extension handle, and then went on to make higher highs in all TPOs till the I period. It was only after it left this small I period selling tail is what told us that Bank Nifty can now kind of pause. And why? Because this was also the 3IB mark of today. So whenever you are getting a 3IB objective done in one day, definitely you will see profit booking coming in, because the buyers have done an excellent job of extending the range by 3 times of the initial balance. So that is what has happened today. This responsive selling tail is a old business which is booking out. So even though we have made a retracement till this 49258, which was the POC of Friday, the Bank Nifty profile is still looking much better than Nifty, because we are already taken out previous week's high, although we have not closed above it today, and we have this good buy side extension handles. So what we'll have to do is we'll need to get back above this previous week high, and then look to probe higher towards this VPOC of 193, which was already marked in our report. So on the report, you can see how neutral center with completely lower value, we have a good chance of moving back to imbalance, provided we get some initiative move away from this week's prominent POC of 564. So scene of crime of 49134 and daily VPOC of 258 will be the minor hurdles, as it can aim to probe towards this 5193. So what we have done is we have got an initiative move above this. We have taken 49134 out and even this 49258 out. So we have closed above these two references. So we are definitely looking good for going for this 5193. But yes, we will have to stay above the latest reference. If you see the spot chart of today, you have this single zone. So this VPOC would be our immediate reference on the downside. So holding above this, we can continue to probe higher. So this, in case we look at consolidation tomorrow after the trend day today, we can remain between this POC and this extension handle. So we'll need to see how this goes. But overall, the start for Bank Nifty has been much more bullish than Nifty. So we will have to see first, and mainly both. If both are in sync, the chances of the move happening will be all the more better. So that is it for today from my side, guys. Let's see how this goes. We will have these hypos updated for tomorrow in the report. So you, as I hope you can definitely make use of the new features which were explained in today's session. They are very important, and you can keep using them in your daily trades and make it go even better. So that is it for today. Thank you for joining in, and do let us know if you have any feedback regarding these sessions. You can mail us support@vtrender.com. You can even ping me on X. My DM is open. So any suggestions are most welcome. Thank you guys, and have a great evening, and we'll catch up soon for another 5 p.m. session.